It's a wild thought, but what if the threat of a policy could be just as powerful, maybe even more powerful than the policy itself? That's what we're going to dig in today. We're talking about how simple words, headlines, heck, even tweets can send these huge shockwaves through the global economy all before a single law ever gets signed.
So here's how we're going to break it down. First, we'll look at this huge ripple effect and see how the tech world ends up right in the crosshairs. Then we're going to zoom out and look at the pattern of uncertainty that got us here. We'll compare the big headlines to what actually happened, and then we'll get to the fun part, calculating the real price of a tweet. All right, let's dive in. Picture this. The markets are on edge. There's this palpable tension in the air, and it's all because of one single looming threat. So, it's August 7th, 2025, and the entire tech world is just holding its breath. There's this deep unease, right? And it all comes down to one thing. A single potent threat that the White House is considering a huge tariff on all imported semiconductors. I mean, think about that. Suddenly, the tiny little chip that runs our entire modern world is hanging in the balance. And if you look at the markets, it's not total panic. At least, not yet. It's more like extreme caution. You see oil's up a little, gold's down a bit, treasuries are kind of holding steady. This isn't chaos. This is what it looks like when every investor on the planet holds their breath at the same time, bracing for a shock to one of the most vital parts of the economy.
Okay, so now we're putting tech in the crosshairs. And this is the part you really got to get. This isn't about some small niche industry. No way. This is a shot fired directly at the foundation of, well, pretty much our entire digital lives.
So, who's in the direct line of fire? Oh, just the biggest names in the game. You're talking about the chip designers, NVIDIA, AMD, Intel, the literal architects of our digital age. Then you've got the product makers, like Apple. They need those chips for everything. And of course, the cloud giants, your Amazon AWS, your Google. Their data centers that power the internet, all running on these chips. They are all completely exposed.
And you can just imagine the chain reaction, right? First, production costs for these giants would skyrocket. Their super complex global supply chains get thrown into chaos. And the result? Well, you and I might end up paying more for our phones. And that small business you love, if they use the cloud, their costs could spike too. It's a classic ripple effect that starts in one place and lands right in our wallets.
So this all leads to the, well, multi-trillion-dollar question, doesn't it? The NASDAQ for years has been basically powered by these massive tech stocks. If they start to bleed, can the rest of the market possibly hold the line? I mean, the stakes just couldn't be any higher.
Okay, so to really understand why everyone is so anxious right now, we have to rewind a bit. This isn't some new phenomenon. There's a pattern here. We have to look at a recent past that pretty much tore up the rulebook and taught investors a very hard lesson: be afraid of the headline.
And here's the core of it. It was, quote, a very deliberate move to shake up how things had been done for decades. The philosophy was basically disrupt everything. This wasn't chaos by accident. It was a strategy, a choice to completely upend the way global trade had worked for generations.
The strategy had a name, America First. And what it did was send this incredibly clear signal to everyone, global markets, allies, you name it, that the old playbook was out the window. The goal was to renegotiate or just tear up old deals. It created this brand new, totally unpredictable environment.
And this is where things got weird. A fascinating, kind of chaotic situation popped up where specific words, even tweets, became direct triggers for huge market moves. You had investors literally trying to read the tea leaves of certain phrases, just trying to guess what was coming next. Communicating policy turned into this bizarre, high-stakes guessing game.
All right, so let's get into the heart of it. Headline versus reality. We're going to break down that huge and, let's be honest, often confusing gap between a big, splashy headline and what actually got signed, or didn't. Let's take the historical EU deal as a perfect example. The headline was massive, right? A historical deal is announced, markets go crazy. But the reality? There was no signed paper. Not a single one. In fact, some key EU leaders came out and said they weren't even on board with what was announced. It was basically policy by press conference, not a real binding deal.
And this shows you how the threat itself became the weapon. It wasn't always about what happened. It was about what might happen. A threat of tariffs on India? The S&P 500 dips. An announcement about new tariffs on China? It dips again. Another threat? Another dip. For investors, that constant what-if game became the single biggest risk factor out there.
And this scorecard really just says it all, doesn't it? The historical deal with the EU, just a framework, no signature. The brand new deal with Mexico and Canada, well, that was really just a renegotiation of NAFTA, with a fresh coat of paint and a new name. The headlines promised these shiny new things, but the reality was often just a rewrite.
So let's talk about the bottom line. Let's calculate the price of a tweet. What is the actual real-world cost when you run policy by headline?
Okay, this is probably the most important takeaway. While all those big, brand new deals were pretty rare, let's say, the tariffs, they were very, very real.
Just look at this number. $29 billion. That's how much money was collected in tariffs in a single month. So while the deals were all up in the air, the cash being paid out was as real as it gets.
So this is the real cost of uncertainty. Let's just list it out. 1. All those public statements directly fueled insane market volatility. 2. That huge gap between what was announced and what was signed created this thick fog of uncertainty. And 3, and this is the key, that fog wasn't just some side effect. It became a massive economic risk factor all by itself.
And this wasn't just a niche feeling. It became widespread. You had market analysts saying there was a growing legitimate question about whether these big splashy tariff deals would ever actually happen. You see, the pattern of announce big, then walk it back just eroded trust. It created this really deep skepticism in the market.
Which really leaves us with this one final massive question. In a global economy where billions of dollars can move in the blink of an eye, is the way a policy is communicated, we're talking its timing, its tone, its certainty, is all of that just as important as the policy itself? You look at all this, and it's hard not to think the answer is a huge, resounding yes.